I used to brag about making money in my sleep, but as we speak, I've been losing money over the past month. Just wake me up when the recession is over. Welcome back to my channel. My name is Ure, but I also go by Chimso. If you're new here, I talk about being young and becoming financially free. If you're returning, hey guys, I hope you all are doing well on your journey to reclaiming your childhood and your freedom through financial literacy. Today I will be talking about my year in review. So a year ago today as I'm filming, it is January 8th, I bought my first stock. I opened my Robinhood account and I've been an investor ever since. So when I started my channel, I wanted to do monthly reviews of my portfolio and my account, but when I wanted to actually do this video, I realized that a few weeks later it was going to be my 1-year stock anniversary. Yay! So I just decided to wait to make this video. So subsequently after this, I'll be doing monthly reviews of my portfolio. Okay y'all, so let's just talk about how my life has been as a new investor over the past year, what I've learned, and then we'll go over my portfolio and how it's been doing. So I've learned a lot of things. I made a video for investing tips for new investors. I'll link it up here. Go ahead and watch that. But there are a lot of things that I have learned throughout this past year. So I'm just going to share a few of them with you and what caused me to learn these things. So the first one that I learned is that you shouldn't be checking the market every day, or I shouldn't be checking the market every day. I talked about that in my video. But basically, because, and I'll touch on this point later, because I'm an investor, it doesn't make sense for me to check the market every day. It's just causing me stress, giving me high blood pressure. I get really happy when the stocks go up and I get really sad when the stocks go down. And the thing with that is the markets go up and down all the time, and it's just causing me unnecessary stress because I'm going to be holding my stocks long term. The second thing that I learned is pay attention to society or the culture around you. So stocks are determined by how well a company is doing and the price earnings ratio. So the price of the stock versus how much they made in profit. I think it's over a year. I need to do more research on that, but the price of the stock versus how much they have made in profit. So their profit is determined by their expenses and how many sales they have made, and obviously that's based on the consumers, what the consumers buy, and then you know how the market is doing, the supply chain, everything that they need to buy. Again, Econ 101. But that's what the stock price is determined by. And because I am an investor, I am a shareholder, I have a vested interest in what's actually happening to this company. So I need to be paying attention to how they're spending their money, what they're using to spend their money, what supplies they're using, the supply chain that determines how much their expenses are going to be, and then how they're doing with their sales, their marketing strategies, new products that they're introducing, new services, and then also how the society and the culture is receiving these things and whether they're actually going towards them to buy these things. So a great example of this is during the crash last year during lockdown. A lot of airline companies and hospitality companies struggled because people weren't able to go out and travel. So because their demand was down, they didn't have a lot of consumers during that time period, their prices also went down to balance out their price earnings ratio. I honestly need to do more research on price earnings ratio, but that's just like a basic example of that. Another thing is, and this is like just my thought process when I bought it, I need to actually check the stock, but when the vaccines started rolling out, I started looking at Johnson & Johnson, Pfizer, and Moderna, and I need to actually check if this happened, but my thought process is as they're starting to roll out, the prices of these stocks are going to go up. So I already mentioned that the prices of the stocks, because I'm a shareholder, I have a vested interest, is based on their expenses, their products, and their marketing, and how culture is receiving their services. Another thing that I learned is that you really don't need a lot of stocks in the stock market, especially if you're a college student, if you're young and you don't have that much money. Just having anything in the stock market is good enough. Most wealthy people actually don't pick their stocks. They actually have an investment manager to do all of that for them. They're either invested in mutual funds or hedge funds, or they have an investment manager or advisor do all of that work for them so that they don't stress about it, because it's better for a professional to actually pick these stocks for you. But as new investors, as young people with not a lot of money, you really don't need that many stocks to start off with. Like for me, in total, I have 15 companies, and honestly, that's a lot, honestly. Like, you really don't need that many to start off with, but as long as your portfolio is growing over time, you will be fine. And then when you get older, you get a job with stable income, you'll be able to put more money in and then get more out. So the next thing that I learned is that the market is always fluctuating. So at the beginning of me investing, like I said, check the market all the time, all day, every day, like literally all day, every day. And the thing about that is you're going to see the market going up and down all the time, because that's what it does. So the more that you see that, the more understanding that you get that the market is always changing based on what's going on in society, what's going on with the laws, the money supply, different things like that. So you just need to understand that the market is always going up and down, but as long as in the long term your money is going up, then you will be fine. And the last thing that I just want to tell you guys that I've learned, obviously I've learned a bunch of other things, but I just want to highlight these ones, is that you need to determine whether you are a long-term or a short-term investor. Basically, if you are a trader or if you are an investor. I figured out that I was an investor when I didn't want to sell my stocks, because I was thinking about like how much they're going to be worth in like 10-15 years, and that's me. Not everybody is an investor. A lot of people are traders and they like to get their money quick and soon. So you just need to determine which kind of investor that you are. A good way to determine this is to look at your goals. Like, what's your main goal for being in the stock market? Is it to get money now or to build wealth later? And to determine your risk tolerance. So short-term investors or traders have higher risk tolerance because they're able to gain more money quicker, but that also means that they can lose a lot of money at the same time. And lower risk people tend to be investors because it's a lot safer to just hold your money in there for a long time. Okay, so now to go into my portfolio. So I'll be talking about my gains, my losses, the trades that I did, my overall growth, my dividends, the stocks that I currently own, and my watch list. I have 8 stocks. I don't know why I said 15 earlier. It's actually 8. It's because I have 15 on my watch list. But my stocks are, I have Apple, Tesla, Disney, Pfizer, Tops, AMRS, and Amazon. So those are my 8 stocks that I own. I am a shareholder in them, which means as the company gets more money, I get more money. So for the overall growth of my portfolio, I have made $500, which is 20% of my portfolio. That's my gains minus my losses has come out to $500. So honestly, I don't know how I would have been able to do this if it weren't for my mom. I don't know what's up with the lighting. I feel like it got darker, but we press on. So my mom gave me $2,000 in, I think, May of last year, and the whole reason why, I didn't even explain this at the beginning, but the whole reason why I actually got into the stock market is because a few girls in my church, they're like 6 years older than me, they started trading during the pandemic because they lost their jobs and they needed a way to make money. So they learned how to trade, and my mom wanted me to talk to them and for them to teach me what they did, and basically that's how I got started. The thing is that when I started, I was going to do trading because that's the whole reason why I opened an account. But then my dad was like, no, don't do that because you don't even understand the basics of investing. So why would you go and do trading if you don't understand investing? So I had already invested some money in there, so I just left it there to hold, which is kind of why I ended up being an investor instead of a trader, because my dad told me to wait and to learn all this stuff before I started doing anything else. So yeah, so my mom gave me $2,000 to do that in May of last year, and that's why I had made $500 returns. I don't have $2,000 on my own, but that's just my returns from this year. My biggest loss has been with Tops. I think that was the very first company that I bought. I only bought it because one of the girls that I was talking to recommended it. Like, at that point I knew absolutely nothing about trading or investing or the stock market, so I just took her recommendation and I bought it. And so far I have lost $56, which is 67% of what I initially put in. At some point it was up to about $65, and then it dropped to minus $30. When my losses dropped to $30, I didn't sell, and I don't know why I didn't sell, because I could be like $25 richer right now. But that's the biggest loss that I've had. And the biggest gain that I have had is with Tesla. For like the first 6 months was my favorite stock because it was just going up, 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 up. I think for like the past year, or at least March of last year to March of this year, Tesla was up, I think maybe like 800%. It was up a lot. I'll put the actual number there, but it was up a lot for a year. And people were like wondering why I was doing that like speculation, because eventually it did go back down, so it corrected itself. But for a long time, Tesla was my favorite stock. I'm currently up $161, and that is 80%. I put in $200. At one point I was up about 150%, and then that's the highest that it got to, and then it corrected itself after. And I was very upset when it started dropping. I'm like, Tesla's no longer my favorite stock, but I still like it because it has the biggest returns, and I see a lot of potential in it for the future. So the trades that I have done are, I did a Pfizer options trade, I did a swing trade with NEO, and then I traded Bitcoin, and I traded Dogecoin. Alright, hey y'all, so it's about 8 o'clock right now. I went to work and came back. I had to record because my phone overheated earlier, because it was like, I think it was about 12:30 when I was recording, so obviously it was really hot. I don't think I'm going to be able to keep recording in here because it's just not sustainable. My phone can't take it. So if y'all see me in my room or my mom's office, just know I already told you before. Okay, but I stopped at the options. I stopped at the trades that I did in this past year. So I said I did a Pfizer options trade, I traded NEO, and then I also traded Bitcoin and Dogecoin. So the first trade that I did was, I'm pretty sure it was either NEO or Bitcoin. All of these happened within 2021. NEO is a I think it's a Chinese based electric car company, so like Tesla for China. And the reason why I did this is because they were doing their, I think it was their annual report or like earnings report. They were just reporting something the weekend after I actually bought the stock, right? I bought it knowing that it was going to go up because of the hype, and I'll explain that with like Dogecoin and Bitcoin as well. But I bought it because I knew it was going to go up because of the hype, and then I was going to sell it immediately on Monday when the price went up. Because this one is a stock and it's not a currency, you can't really see the prices over the weekend. The big event happened on, I think it was Saturday, so the market opens on Monday at 9 a.m. I remember I sold it at work because me and my mom were doing the same thing, so I probably sold it around like 10 or 11 o'clock. I don't exactly remember what I bought it at. I'll put it up here like when I'm editing, but I bought it at this price, and then it went up to this price. I think it went up to $30. I just don't remember what price I actually bought it at, but it was I think a 30% return over the weekend. Obviously it dropped off after that, because with a lot of stocks, whenever there's something going on, there's a lot of hype built up, and then after the thing happens, it just goes down because it really wasn't that deep. So the other thing that I traded was Bitcoin. Honestly, I don't even remember what, I know why I did. Okay, so I wanted to buy into Bitcoin, so I put in $600, right? I put it in when it was about $34,000, and then it started to drop, so then I sold it, but then it went back up, so then I bought it again at $34,000. It was going like up, and then I was really scared because I'm like, okay, Bitcoin is like, it has been going up since what? I think it was November when it really started to shoot up again, and I was really scared that it was just gonna drop. So it had gone up to, at least for me, I reached a point of about $400 profit, which is a lot. I think that was within a month, right? And then after that, it dropped. I think it dropped back down to $200 profit, and then I told myself, okay, because it was just causing me a lot of anxiety, like I really could have lost all $600, and I didn't want to do that. So I told myself if it reaches 350 profit, I'm gonna sell, and that's what I did. But like a little bit after that, it went up to where I would have gotten $500 profit, which is what I originally wanted. But I'm not like mad that I sold before, because I really didn't know it was gonna go up. It really could have just dropped, and I would have lost all my money if I held it. So what I did with that 350 profit is I reinvested it to hold. Therefore, any money that I lose in Bitcoin is just the profits that I made. So technically, I'm not really losing any money. I'm just losing capital gains. With Pfizer, that was the third trade that I did. I did an options trade. This is the only options trade that I've done in the last year, which is ironic because that was supposed to be the whole reason why I started. I did an options trade with Pfizer. I bought it at 37 cents, which is basically $37 for options trade. The price that you pay is the price of the option times 100, because you're technically buying the option to buy 100 shares. So the price of the option was 37 cents, and then when I sold it, it was 42 cents. So I had made a $5 profit, which is about 14%, which is really good actually. Now I'm thinking in terms of an investor mindset. I don't know if 14% is good for a trading mindset, but as far as my investing mind goes, 14% is pretty good, and I made that over the weekend, so I was happy with that. Now for my favorite trade of all time, my Dogecoin trade. So I compromised my values when it came to this one. I did buy it before the whole Saturday night live thing because I just wanted to hold another cryptocurrency, and Dogecoin was really cheap. So I put in $30, right? Very quickly it went up to, I think it got like 500% return. So I bought it when it was 8 cents, and then at that point it was probably like 35 cents, I think. Either 35 or 40 cents. So then I had put, I can't believe I'm about to say this, I had put $1,000 in it. I only put it in there because like my friends were doing it as well, so I didn't feel alone in doing it. But I put $1,000 in there when the whole Saturday Night Live thing came up. And the thing with that is I would have actually sold before Saturday Night Live came on, because I had a, I think, $600 profit, like, you know, throughout Saturday, but I was working that day, so I didn't see like it had gone up that much. All I saw was that it went up like 300, 400. And if I had seen that it went up $600, I would have sold immediately. Like, I was not going to hold it. I don't know why I didn't even sell after them, but I was planning to sell, but I don't know why I held it. So I held it, and then obviously if you were on like Twitter or anything when it was happening, as soon as Saturday Night Live started, the price dropped, it tanked. So I was going to sell on either way, whatever happened, I was going to sell on Sunday, but I didn't want to like panic sell, so I was gonna wait for it to go back up to me having a profit of about $100. So that's what I did. I waited for it to go back up. I sold when I had a profit of $85, and that's just kind of the price that I stayed at. But yeah, those are my trades from this past year. So now I'm gonna talk about my dividends. I think the only 2 companies that I got dividends from are Pfizer and Apple. I tried to go through my list. I couldn't find any other ones, but if I do, I'll put it up here. So for Apple, they do quarterly payouts, so every 3 months. So far I've gotten it 3 times. It's 20.5 cents per share. So, and I have, I think, 1 share of Apple. So I currently, over the past year, or over the past 3 payouts, I have gotten 64 cents. And then Pfizer also does quarterly. I bought Pfizer back in December, so I've only gotten it twice so far, but Pfizer gave 39 cents per share. So I got a total of $2.34 because I have 3 shares of Pfizer. This is, I don't know why I didn't get more. I feel like I should have gotten more than that. Pfizer one sounds accurate, but Apple's a few, like, it's at least $100. So I don't know why the dividend payout wasn't more than that, because it's like not even 1%. But yeah, that's what I got. I don't know why it's like. In my watch list, I have 15 companies in my watch list, but I have index funds watch list and then just a general companies watch list. So in my index funds watch list, you can see what I have in my index funds video. And then in my regular companies watch list, I'm not gonna name all of them, I'm just gonna name a few of them. I have Neo, Visa, Google, and Microsoft. I also have Facebook. I think I have Chick-fil-A, but basically a watch list are companies that you're watching and you're planning to buy into them in the future. I haven't really bought into them, and I'm about to explain that and why I haven't. So I haven't bought any stocks recently. The last one I bought was Pfizer back in December. Obviously I got my cryptocurrencies this year, but those aren't stocks. So I bought my last stock on December 14th of 2020, and I haven't bought any new ones since then. I haven't really done research on these stock companies in general to see which ones I should be buying. Most of them that I bought into is just because like I know the company, and generally big companies tend to grow over time. But like for the stocks that are on my watch list, I actually want to do like real research on them and figure out like how investors actually pick their stocks. So that's one of the main reasons why I haven't bought into it. Also because back in December, I was expecting like when everything starts opening back up, we're going to fall into a recession, and I didn't want to buy it then and then have my money go down. Even though I'm a long-term investor, I just didn't want to do that. And it's true, like right now we are in a recession. The highest I have had, even like forget about all my cryptocurrencies, but the highest I had gotten was $3,300, right? And right now I'm at $2,900 and about $60. So I've lost a few $100s in the past few months because of everything opening back up and then like our society going into a recession. So I'm trying to like figure out when I should actually go in and buy into these companies. Honestly, it doesn't really matter if I'm thinking long term, especially if they're good companies, because they're going to go up, or the trend says that they're going to go up. But you know, it's like analysis paralysis kind of thing, even though I haven't done any analysis. But yeah, that's just my year in review of my first year being in the stock market. I hope you guys enjoyed. If you have any questions for me or you would like me to touch on anything else, you can go ahead and leave that in the comments. Like, comment, and subscribe. Share this with anybody you think would benefit or you think would enjoy this video. I know I didn't have really a lot of energy, especially like right now because it's after work. I'm tired, but like earlier I'm just really stressed out. I got a lot going on in my mind, so I'm sorry if I don't have that much energy. But yeah, go ahead, like, comment, and subscribe. Comment down any other videos you would like to see me do and I will take them into consideration. That's all I have for you guys in this video, and remember to always ask why. I'll talk to you later. Bye.